Dave Jenkins, president of the Cleveland Browns and Haslam Sports Group. Thanks for being here with us today.
Thanks for having me. It's great to be here. Exciting week.
I believe you just completed year 23 with the Cleveland Browns. I'm curious, how has the business evolved during your tenure from all the way back then to where it is today?
You know, that's a great question. I'd say back in the day, it was about putting on a football game and getting people into the building and hopefully giving them a great experience, which was often measured by a win or loss. I'd say today we're much more about building a brand that our fans and our partners are proud to be associated with, and that takes a year-round effort. So whatever we can do from a social and digital content, how do we customize your experience? And then once we get you into the building, what is that experience? So I feel like this industry very often sort of invents or creates products that we think the fan wants, and that's how the relationship evolves, really, is more innovation and feedback from the fan.
You know, obviously on the national level, media rights has become such an important driver of revenue in the league. It drives team valuations, and it's why the average team is worth $7.1 billion today. But you have control over your game day and other revenues, and I'm curious, what are you most bullish on in terms of what you can grow? Is it premium? Is it sponsorship? Where do you see that growth?
I think what we're seeing across our three teams, so the Cleveland Browns, the Columbus Crew, and the Milwaukee Bucks, is a growing demand for premium products. So this year we're putting $25 million into Scott's Miracle Grow Field in Columbus, just adding new premium products. So trying to enhance, we're building a new stadium in Cleveland that's going to be 30% premium products. So a substantial investment in that experience.
I'm curious, how do kind of having these three teams in the portfolio come back and help each other? I mean, obviously the Browns and Columbus, both in Ohio, Bucks in Milwaukee, but how do you take those synergies and then make it work across the entire organization?
So one thing we've tried to do when we formed Haslam Sports Group was find efficiencies. Do you really need a CFO at every team? Do you really need a chief counsel? So we've worked to find efficiencies, but we've also learned you have to invest in the individual markets. So you have to invest in sales, you have to invest in marketing, you have to invest in operations. And then as an industry, can you learn from each other, but don't lose sight of these three, I'd say, mid-market type cities, so Milwaukee, Columbus, and Cleveland. So we've got to be really dialed into those markets, invest in the markets, and then realize some synergies where we can.
You mentioned the stadium project. I want to get an update on that, but first dome stadium in Ohio, are we getting rid of snow games altogether? Is it the end?
It kind of will be the end in Cleveland, but the interesting thing is we're using a new product called Viewscape for the roof, which is an adaptation of ETFE. It's going to feel like you're sitting outdoors. It's going to be looking like through a lightly shaded sunglass. You're going to see crystal clear images of clouds and airplanes, so we'll have a ton of natural light. You'll see the snow, it just won't be hitting you.
It's not easy to build a stadium, so I'm curious, how far along in the process? When can we expect that we can start having a date to look forward when the Browns will be taking the field in their new home? Where are we at here?
So we've actually started site prep on the stadium in the last couple months. We're going to start digging the hole in late February, early March. So we're moving forward, and we're going to be playing our first games in 2029. So we have 3 seasons left in the old building, and in 29 we'll be in the new building.
You played an instrumental role in securing public money for the project, and I'm wondering, how did that play out? Why was that crucial to get this done?
You know, the complicated factor or element of these projects is they're so costly nowadays that one entity can't rationalize paying for all of it very often. It's not typically the route. But when you aggregate the fiscal impacts of the public entities with the private results of the private company, us, you can actually get to an equation. So the state of Ohio stepped up massively with a $600 million contribution. The city of Brook Park, we think, is going to be in the $300 million contribution range. And then we'll pay for the balance of what's likely going to be probably a $2.4 to $2.6 billion stadium, plus another $1 billion of mixed-use development.
I mean, they're massive numbers. There is a spectrum in which, certain states differ, but the idea of should public money be used for something like this when team valuations are skyrocketing, how do you reconcile that kind of the differing opinions there?
Well, the team valuation skyrocket is highly illiquid.
Yeah.
So outside of selling a piece of that, which is a major business decision, I go back to my point on it's so expensive that you really need the aggregate result of the public sector and the private sector to help fund it.
Yeah, you mentioned the mixed-use real estate project as well. Obviously, I don't think there's any sports development project today that doesn't include some sort of real estate or development attached to it. How are you thinking about, using this to drive revenue back to the Browns? Because obviously you can develop the area, but the ultimate goal is to make the sports portfolio better.
So we've got 3 pro sports teams, the Bucks, Crew, the Browns, and all of them have an element of mixed-use development around them. So the Deer District in Milwaukee, we're building Astor Park in Columbus, and now our Brook Park Stadium will have a mixed-use development.
Yeah.
What it does is it brings footfall to the district. It brings people to the district. We're going to have 2 hotels in Cleveland. We're going to have 1,200 apartment units, 500,000 square feet of retail, and 500,000 square feet of office space. So we won't take all of the risk. We'll have an equity partner in that. But it brings people to the district, which brings people to the stadium. The stadium brings people to the district, which brings people to restaurants and hotels. So they play off of each other really effectively.
You bundle all those naming rights together too, because obviously these areas, if you're going to sell for the stadium, you can obviously set the stadium around it. Is it better to carve those up and sell them separately, or sell them all as one package?
So we've hired legends to help us sell the stadium. We're now going to use them to help sell the district. Because what you don't want is competing sellers, one selling a stadium, the other selling the district. And you kind of want to avoid competing brands to some degree. If there's brand XYZ in the stadium, do we really want brand ABC outside of the stadium? So it's a delicate balance.
How far does kind of the real estate interest go? Is it merely just you want to develop solely around the stadium, or are you picking up other parcels in those markets to develop as well?
As of right now, we're focused on the 176 acres that we've acquired. Do we think there'll be a spillover effect to some acreage around us? Yes, but we haven't determined if we'd be interested in that piece or not at this point.
So outside of the 3 main teams, Haslam also has, WNBA working on that investment, an investment in Aston Martin F1. I'm curious, so the goal is to grow the sports imprint here. How are you thinking about kind of these tangential investments that are also in sports and what they can do for the broader portfolio?
At Haslam Sports Group, we really call ourselves investors and operators of sports and entertainment assets. So that can come in the form of large-scale, really well-known teams, or it can come in the form of limited partner investments that are of smaller scale. So we've invested into WNBA as a league, not as any teams, in Aston Martin. And these opportunities come out of our reputation as investors in sports and entertainment assets, but also through great partners like Arctos, private equity firm, or just the connections that we've made in the industry. So if it makes sense, if it's interesting, Tomorrow Sports we've invested in, if we think it's innovative, and if the other piece is can it affect or positively impact our fan experiences, we'll absolutely take a look.
As far as the broader sports portfolio goes, awarded soccer matches, Olympic soccer matches in 2028. I'm curious about how you're thinking about what that can do for the market, what that can do for the franchises long term. It's a big deal to bring that there. So how do you take that, effectively monetize it, or use what it does to bring it back to the organization?
There's such a public part of investment in these facilities. So part of the return on their investment is doing more than just what the facility was originally intended to do. But Columbus has done a phenomenal job, even before we bought the Columbus Crew, of establishing itself as a bit of a soccer capital of North America. So getting things like Olympics, getting more events, soccer-related events to Columbus helps bolster that image.
So before I let you go, I do have to ask, we're sitting on Radio Row at the Super Bowl here. This time next year, Cleveland Browns in the big game?
We got some work to do. We're always focused on building a contender. As an organization, we talk about 3 things. We want to win consistently. So whatever we can do, whether you're on the business side or the football side, to support winning. We want to take great care of our fans, and that's a year-round experience like we talked about earlier, and then give back to the communities that are so focused or supportive of us. If we do those 3 things, I think we'll build a winning organization.
Dave Jenkins, thanks for being here today.
Thanks for having me.